I'm Charlotte McLeod with the Investing News Network, and here today with me is Gareth Soloway, Chief Market Strategist at InTheMoneyStocks.com and VerifiedInvesting.com. Gareth, thank you so much for joining me today. Great to see you.
Oh, it is great to see you as well. Thank you for having me.
Of course, really nice to be catching up with you, and we have so much going on right now. I think where I want to start is with the latest inflation data. We got both CPI and PPI last week, so I wondered if you could walk us through those numbers, what we saw there, what we stood out to you.
Yeah, so we saw the CPI and PPI numbers declining just a little bit, which is what the market wanted to see. I think the one thing that stood out to me is that if you stripped out the core from the CPI, the number didn't really fall much. In fact, it upticked very, very slightly. So again, the PPI number was a very good number. It told us that on the producer side, inflation is dropping. The CPI number, if you took out food and energy, it was not dropping quite as much. So right now, the market's liking this. We're seeing a good risk-on environment. But I want to see what happens as we get into earnings season and what happens if we look at a recession like the Fed has now said we will get in the second half of the year.
Right. And, you've reminded us before that, it's going to take a while to get down to that 2% inflation number that is the Fed's target. So I wonder if you can talk a little bit more about that and how close we can possibly get.
Yeah, so I think the key is when you're getting inflation to come down from 9% or so, the initial move down will be very quick because again, that was really inflated due to supply chain issues and other things like that. The trouble is always the last little bit. And I always liken this to, people can get in shape or I can get in shape, but how much more do I have to do to just get that six pack, right? It's that last little bit that's the hardest to achieve. And I think for me, that's looking at the market and the economy and saying, okay, inflation should come back to 3%, give or take, but can the Fed get it to 2%? Can they get it to below 2%? And I'm skeptical on that. I think it could take years for us to get below 2% again. And that's going to put handcuffs on the Fed in terms of if we do hit this light recession they're predicting now, how do they get us out of that? Or does it turn in? And this is my fear, is that it turns into a recession that lasts a long time. We find ourselves in this light recession, but one that lasts for potentially a year or two.
Yeah, and I wonder about what other factors the Fed may be looking at as it makes this its next move coming up. What else are you seeing there?
Yeah, so I think the Fed is probably on point to raise 25 basis points more. I think they're being a little bit more careful now because of the banking crisis. Even though we've seen that the banking crisis seems to have subsided, one of the concerns I have is looking at the regional bank ETF, the KRE, and the KRE still is showing us that we're not really out of this crisis. We're not bouncing back and getting back some of the losses that we had on that chart. And so you have to be, as an investor, someone who's very concerned here that maybe things could escalate again at some point. And I think one thing to pay attention to is Jamie Dimon recently did say that it's not over and that there are still possible hiccups in the banking system to come. And the market, again, is in this groove of ignoring a lot of these things. They ignored the Fed saying we were going to have a slight recession. They're ignoring Jamie Dimon saying this. Warren Buffett was on CNBC recently, and he said that one of his retail companies, their sales year over year were down 22%. Market ignored it. Wasn't even a headline. So there are these things that are going on right now that, to me, have me becoming more and more conservative and more bearish. While the overall market seems to be ignoring this and it's risk on.
Yeah, we've been talking about the Fed coming out and saying, okay, we're heading toward a recession. This is something that you've been telling us is going to happen for quite a while.
Uh,
And, I wondered if you can talk about what you think that we will see in terms of recession.
yeah, so I think the Fed, again, and this is the tricky thing, is that the Fed said a mild recession. They also said inflation was going to be transitory, and we know what happened there. So I think the Fed has a huge credibility problem. I certainly don't put a lot of credence into what they say it's going to be. I mean, if they're telling us it's going to be a mild recession, I would generally price into my investments a mid-level recession, right? And so I think investors have to be aware of that. Do you trust the Fed? I mean, if the Fed's telling you this, do you think it's going to be that, or is it going to be worse than what they say? So for me, it's saying, okay, a recession's coming. The question to me is, how do we get out of a recession? The past 15 years, the Fed has bailed us out because inflation's been below 2%. What now happens if inflation's at 3% or 3.5%? Can they bail us out without causing a massive spike in inflation again, like we saw in the 80s? So it's again, this is now entering to me a phase of the stock market of investments where investors now have to be very careful. Historically, when the Fed actually even cuts rates, that's been a period where the stock market actually declines, even though right now it seems like investors would be thrilled if the Fed started to make money cheaper. The reason why historically the markets have declined is because if the Fed's cutting, something in the economy is really broken and they're feeling forced to cut. And that again would be a situation where I would be very nervous if we get to that point.
Right. And, we actually haven't spoken since all of this turmoil in the banking sector began. And I wonder your thoughts on that. And if you think that this is maybe just the beginning or if we really are through it, like some people seem to be thinking.
Yeah, so I'm not sure about the banking sector itself, if we'll have some major issues, that continue. But the one thing I do know is that when you have inflation, well, when you have interest rates that are at 0.25 basis points and you raise them to 5% in a very short period of time, you're going to break things in the system. The banking sector, the regional banks that we saw go under, that was just the start. To me, that was a tremor before something bigger. So I highly doubt that when they jack rates up this much, that's the only issue we have, and that somehow we're going to avoid any sort of major recession or major breakages in the economy. I'm more in the camp that this is probably a precursor to some other big things that are coming down the pike.
And just out of curiosity, were you able to find ways to trade that uncertainty in the banking industry that we saw?
Yeah, so that's the beautiful thing about it is I'm a more short-term trader, meaning I day trade, I swing trade. Swing trading is holding for days or weeks or even a couple months. And so when you get added volatility like this in the stock market, in asset prices, there usually is fear-driven selling, which is an overreaction, and then fear or greed-driven buying, which is an overreaction. And so there's counter-trend plays to that. So it actually has been an amazing trading environment in the stock market, even in crypto. But again, it's not for the faint of heart. You have to kind of be willing to step up when everyone else is panicking.
Yes, which is always tricky. So I want to move over to gold because that's what our audience is usually the most interested in. So
Yeah.
gold, we see it getting a little bit more comfortable over 2000, which is different than the other times that gold has passed this level. It's kind of in the past gone above 2000 and then gone pretty quickly back. So are the charts telling you that something is different for gold this time?
Yeah, so to me, this is definitely the real deal, right? And part of it is going historically back to the 1970s. I think we've talked about that before, how the pattern that we saw from 2018 to 2020, from 2020 to 2022, and now this starting up move is totally almost a replica of what happened in the 1970s, where gold actually, after that consolidation period, started to do a 9x return. It went from about $100 to about $900 an ounce. Now, again, I don't think that we'll do a 9x here on gold at these levels, but at the same time, to me, this is the replication of human sentiment and what's going to come forward. So I do think that per the charts, and I've been bullish on gold for the last couple years, is that we should break the all-time highs at around 2075. And I think by year end, you're looking at 2,300 at minimum. And I think really 5,000 within a year or two is very, very possible. This should be the new bull market here in asset prices, if you will. And I think it's long overdue. And we should see. Yeah, I mean, I continue to be very, very bullish on gold.
Yeah, we've been talking about gold for a long time. And I remember when we spoke at the end of last year, you said that 2050, 2070 level was where there was resistance. So I wondered if you could talk a little bit more about gold's path forward in 2023 and just how we could see that unfold.
Yeah, so the way charts dictate, right, is that we have a very clear resistance from the high of 2020 here to the high of 2022 here. All right, so we know that there were investors that were kind of up there buying and up here buying, and each time we pulled back. So what that's going to do is it's going to trigger when we get back to that level. There's going to be some investors that say, hey, listen, every time it's gotten here, it's pulled back, so I'm going to sell into that. And what that does is it ultimately causes a pullback at that level. It's called a triple top in this case. So off of this, the way triple tops usually work, you get a small pullback of those sellers, but the overall macro bullish pattern here, this is when, see, if we look at this bigger pattern, it's all sideways. Yes, it kind of came down, then up, then down, then up, but overall, it's a sideways channel. That's a bullish channel. That tells you the macro, the bigger move is going to be a big breakout to the upside. So again, in 2023, I do think we touched the highs here, the triple top. You'll probably get a little bit of a pullback, a few sellers that say, I'll take my profits and run here. But then I expect by end of year to break above this level.
Okay, so we have some idea of the upside potential for gold in 2023. I do always like to ask you about how low we could go, partially because it's something we should know, partially because that's an area where people might want to buy. So how does that look like for you?
So in terms of buyers, what I've been saying is to buy the pullbacks, right? So you never pay up when something's gone on a run for 10 days in a row or something. Never pay up because you'll inevitably get a pullback. The question is, where do you buy? And basically for that, what we can see is if you take the high from 2022 to this high, there's this downsloping trend line, and then you have this upsloping trend line as well. And what we're seeing is that those two are getting closer and closer to the same level. So for me, that creates a confluence of two major support lines. And if we were to get a pullback on gold here to basically 1925 to 1900, that would be a really good technical support to buy for that next leg up that possibly could see a breakout through the 2075 level.
Okay, very useful. And, if we're talking about gold, we have to mention silver as well. So silver has been on the move. We saw it get past 25, even 26, but we are
Mhm.
still a long way from $30 per ounce for silvers. And I know that's a level that a lot of people are excited to eventually see. So is $30 for silver a possibility in 2023?
I do think it is a possibility. I mean, it's definitely the high end of my target. And again, we can see that gold is much closer to that double, triple top than silver is at this point. Part of that reasoning is also if we are going into a recession, then the industrial side of silver suffers while the store of safety still helps it. So it has something working against it during a potential recessionary situation. Having said that, I still think that by year end, if gold's going to make a move towards 2,300, it makes sense that you could probably double top on silver between $29 and $30. I do think silver eventually breaks out. I think most of commodities, because inflation is going to stay high for a longer period of time, most commodities do very well. But I think at least for this year, my high-end target would be that double, triple top.
All right. And when we talk about gold and silver, I know that people always want to hear about the stocks as well. And investors, some investors at least, are still disappointed to not see their gold and silver stock investments moving along with the prices. So, what are your thoughts there? Do you see the stocks catching up with the metals, and when might we see that happen?
Yeah, so I think one of the things that most investors had a hard time with in 2022 is that the miners underperformed even gold and silver so dramatically. And the reason that happened is because you had inflation that was super high and ultimately the metal prices weren't keeping up with the inflation, right? So inflation was much higher than what we were getting out of gold and silver in terms of upside. And what that meant is that the input costs for these gold miners were skyrocketing, but they weren't able to sell gold and silver for higher prices at the time, which made their markets essentially much weaker, their stock price much weaker. That is actually changing now. What we're seeing is inflation is starting to come down while the price of metals is going up. So you actually should see a reversal now where the miners actually outperform dramatically to the upside if I'm correct that the metals do go higher. So I think they will play catch up, and I think, again, a lot of the metals will do really, really well. Again, if I look at GDX here, GDX has had quite the run, so I wouldn't be a buyer just yet. Wait for it to pull back maybe to this pivot high around 33.20, and then that's where you would start to nibble a little bit at that price.
Okay, so thank you for going through what's going on in the precious metals. Always good to check in on that. We also should talk about what's going on in Bitcoin, which I know you follow this market really closely. So we have seen Bitcoin moving as well. Curious to know what you think about what's going on there. Is this sustainable? What might we see next?
Yeah, so we are at an epic level on Bitcoin, all right? And what I mean by that is that in terms of psychology of the market, this level is the top level to watch, meaning that if we can break it, that's very bullish that the lows are officially in on Bitcoin at 15,700. If we can't, then to me, there's still an opening for Bitcoin to go down to 12 to 13,000 level and maybe even below that. And the reason I bring up this level at 30,500 specifically is if we take a trend line and we go back to the lows starting in 2021 before the big pop, then the retrace came right back in there where we hammered on it for a long period of time. We then had the run to 69,000 and we came back in and consolidated right along that line. So psychologically, when we broke this, that was very bearish for crypto. if we could get above it and stay above it, then that's very bullish for crypto. So again, right now we have made a full round trip from this breakdown here all the way back to that level, but we're still hammering on that level. And again, the level's approximately 30,500. So for me, this is an epic level to watch. I want to see, can it get above? Can it stay above if it gets above? If it does, I think that bodes very well that the crypto markets have bottomed out for this bear market cycle.
I know that you focus really closely on what's going on with the charts and the data, but could you give some insight on what exactly is driving the Bitcoin price right now?
Yeah, so it's so interesting on the Bitcoin price because number one, when it was at 15,700, 20,000 even, we were oversold. There's no doubt about it. We were just coming off of FTX's collapse, lots of fear, all of that stuff. Anytime you get a maximum fear, you're going to get a reflex buy and kind of pop. It's just the nature of the cycle of markets. What ended up happening is after we were up here, we started to fall back down, and then the banking crisis happened, and I think there was a lot of money that went right in from the regionals into Bitcoin, right? I mean, and again, I've said this before, but if there's one reason for Bitcoin to be Bitcoin and be what it is, that crisis in the banking markets showed it, right? I mean, that's exactly what Bitcoin is supposed to be. It's supposed to be an alternative to the fiat currency system and the banks and all that stuff. So that really propelled new money in. And then as of now, we've seen generally a risk-on environment in stocks, in cryptocurrencies, which has kept it kind of grinding higher. So I think that was kind of a little bit of a situation where it was very, very good for the crypto markets in Bitcoin. Now, again, the big question is, can it get through here? If the stock market starts to decline precipitously, does that pull it back down? I do think it's still a risk asset, even though it's still showing signs every once in a while of being a store of safety. So as of now, as long as we stay below this 30,500 level, I'm going to remain slightly bearish, thinking we still are not through the bear market. But again, if we get above there, then it could be a game changer.
Very tricky. So we have to be watching closely those levels. I
Yep.
want to check in just on the downside for Bitcoin in 2023. I think you mentioned 12,000 just now as we've been talking as a possible low point. When we talked at the end of last year, you thought that perhaps it could even get down to 9,000. Is that still a possibility, or is that out of the cards at this point?
So that is still a possibility. Again, the bigger question is on the levels. When do we break, right? So the way as a trader I work is that each level is a level until it's broken. So let's just say we pull back here. We could very clearly see that there was a lot of support here where it kind of consolidated, and that level's around 26,700. We then have a level at 25, and then this beautiful upsloping trend line around 22. As we break those levels, like if we break 22 here, you then have this pivot low at around 19 and change, essentially 20, and then the double bottom at 15.7. So for me, it's going to be a more of a stage. I still think that's possible. I find it very hard to believe that somehow the crypto market has bottomed with so much bullishness in it. You never really got the panic and fear. Even with FTX, you didn't get people saying, I'm throwing out crypto, it's done. You know, for the most part, it was buy the dip. And that's a very concerning mentality. If you look at all the bottoms in markets in history, that doesn't happen. Also, you have so many cryptos that are still out there that have very minimal use case, if any, and they're still alive and well, versus in the dot-com era, you basically saw a washout of those dot-coms that had no use case. So there's a lot of signals to me that are very concerning, and so I want to be very careful about, whether or not we can get down to 12 or 13. I think we still can. 9, if we break 12 to 13, then we're headed right for 9.
I think that gives us a lot of insight into your strategy. You're constantly readjusting. You're looking at the
Yep.
markets every day, of course. I want to ask, where have you seen the most success in your trading so far in 2023 now that we're more than a quarter into the year?
Yeah, so for me, the most success has come from short-term trading, right? Where when we get this volatility in the markets, I'm jumping in and then I'm jumping out, and then I'm usually getting back in at around the same level. So it's been a trader's market. I think that when you had the Fed intervention with all the money printing, it basically made the markets just go sideways to up for long periods of time. I remember the VIX getting down sub 10 over the last 5 or so years when the printing was going on, when quantitative easing was going on. And that was very detrimental to people like me who are swing traders, who like the quick moves, the volatility. Now we're back in a volatile market, and that is just gravy for us that want to get in and want to get out. And I can make so much more money than a long-term investor by trading the levels back and forth. And just like you said, it's a matter of I'm a trader that's always reanalyzing, right? Every day I'm doing a risk reward assessment. I'm doing a probability assessment. Are we going to bounce here? Are we going to break here? How's that going to play? And then that dictates my daily trades on a consistent basis.
So to me, it feels like volatility is not going away anytime soon. So it probably will remain a trader's market. But how do you see it for the rest of the year?
Yeah, I'm with you. I think that the market was kept neutralized, almost like being a drugged patient, where the Fed was injecting this money and it was just keeping the markets kind of in zombie mode, grinding higher. You now have a patient that's getting off the drugs, right? The Fed stopped printing the money, and now it becomes a much more real life situation where there's volatility, there's craziness. And as long as the Fed isn't coming back and printing money, you're going to get this more volatile market, which means traders and investors need to be more nimble. You can't just be an investor that, to me, goes to sleep and says, hey, I'll check back in 3 years and I hope I did well. That was the old way. The new way is to be more of an active trader.
All right. So as we're wrapping up, I want to check in on one of your calls for 2023, which was that gold will outperform both Bitcoin and the S&P this year. This is the same call that you made last year, and it did come true last year. So now that we are about 4 months into the year, how is that standing for you? Is that still what you're thinking?
It is still what I'm thinking. So gold's performed amazingly well. I think it's beating the S&P right now, not obviously Bitcoin this year, but I do think that Bitcoin could run into some serious issues before year end. So I'm going to stick with the safe, steady gold trade here. And again, part of it is being a risk adverse in a market where we don't know the outcomes of banking crisis and different things like that. And I think that's the play right now, is to be safer and be kind of in the sure bet versus going for the kind of the home run, which could be Bitcoin maybe continuing up, but Bitcoin could also drop 20, 30, 40% in a very short amount of time.
Okay, so gold is still in. That's always what I like to hear. Do you have any final words that you would leave the audience with as we're wrapping up?
Yeah, I think just keep in mind that this is a market where, the good traders and investors will stand out. Bear markets notoriously show you who basically can trade and who can't. In a bull market, everyone looks like a genius. What I always say to people is take 5 minutes a day and try to learn one thing about the charts, learn one thing about human psychology, and in a year you will be a totally different investor with so much more insight, making such much better decisions. So again, just a little education on a daily basis makes a big difference.
Really great. So thank you so much for joining me. Always great to hear from you. I'm sure we'll catch up again soon. Great to have you today, though.
Thank you so much for having me, Charlotte. You take care.
Of course. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Gareth Soloway with InTheMoneyStocks.com and VerifiedInvesting.com.